Is Sam going live?
Yes.
Cool. All right. Good evening, everybody. John here, and welcome to Side Hustle Investing, another nightly episode of me reviewing my portfolio. And I just want to say I just got back from a Disney cruise with the family. I've got a beautiful wife and two daughters, one 2.5 years old, one that just turned 1 year old on the 5th of this month. And for any new dads or new parents out there and you're considering taking the plunge, I highly recommend it, but probably wait until they're 5, 6, maybe 7 years old before you plunk down and go for that Disney cruise. It was a good time. It was definitely interesting seeing a 2.5-year-old with unlimited ice cream at her disposal, running around just causing a ruckus anywhere she went. But I do think that some of the magic was a little bit lost in the Disney universe. But regardless, we got home safely and sound. They took care of us. But here we are back to talking about options trading. So I wanted to kind of give a brief overview or a review of where we're at overall with this portfolio. And to do that, I pulled up my activity tab and I showed all my orders from 2 months back. Now, I haven't had this account for 2 months. I've only had it. My first active trade was here on January 26th. So as you can see, from January 26th to now, February 15th, we haven't yet reached 1 month yet. And with my initial $10,000 in the account that I deposited, I'm up now to $10,220. So up $220 in a couple of weeks, which I am thrilled about given the market conditions we've been given. If you guys listen to Tasty Trade or any of the other educational platforms out there, you'll know we're not in the ideal environment to be selling options premium. So I think this may be a little bit of beginner's luck, and I am due for a trade to not go my way. But so far, so good. And so you all know, this is just my liquidating value if I were to sell everything right now. But if we go into my portfolio and we look over here, my actual cash value, and I'm going to test out something new here. My actual cash value is sitting here at $468. Let me see. Got a new computer with a fun little pen toy on it, so I'm going to play with that a little bit tonight. As far as the credit that I've received, up about $1,500, but in terms of all the extrinsic value, you can see here, $1,008 is still extrinsic value. So kind of the difference between that and take out commissions and things of that nature, you get to where I'm currently sitting at the $10,220. So in my opinion, very good progress for such a new and such a new portfolio, and couldn't be happier. So what I want to do tonight is kind of do a brief recap of the trades that have been going on since then. And hey, Joa? I think it's Joa. Let me see if this works. This is my first time going live and actually chatting with somebody in the process, so thanks for joining in. I guess I don't really need to type it, right, if I'm talking and you're watching, so very cool. So what I want to do is go through my trades that I've done since then. My portfolio has definitely been built out significantly from the last time that I broadcasted, and I apologize for that. And especially, Joa, you and some others that have been making some very kind comments along the way. I want to document my journey better, share my portfolio value, everything along the way, because I'm learning, and I know you guys are all learning too. So what we're going to do is we're going to sort this to show all my filled orders since the last time that I broadcasted, which was the 6th. And I won't go into any crushing detail on any of this, but let's go ahead and come back here to the 6th. And we made the trade in CSX, and we made a credit call spread. I believe it was on the call side. And that was just a directional trade to help us maintain portfolio neutrality. And what I want to talk about, really, because we've made a bunch of trades since then, I don't want to go through one by one. I want to talk in the context of the direction that I'm taking my portfolio at this point. And so let's go ahead and get into that. So if you can look here, let me zoom in to show how my portfolio is looking. And Joe, I'm gonna call you Joe. I hope that I'm pronouncing that correctly, and if not, feel free to type in and tell me how to pronounce your name. But you kind of mentioned you're trying to figure out how to do portfolio balancing as well, and that's really the focus for the first few months of my trading, hopefully long career that we're going into here. And like I had mentioned before, the ideal for me would be I want to be profitable anywhere within that plus or minus one standard deviation. We'll call it 1 SD curve on the S&P 500. I'm not quite there right now, but what I give up in return is, you can see my max profit is right around 1,000. My max loss is not too much more than 1,000. So I'm not at a 1-to-1 right now, but my risk to reward ratio is very, very good. And we'll talk about some of the reasons why that is. But the overall goal for me would be to have that portfolio curve nice and smooth, which I'm happy with how it's smoothed out, and kind of, I kind of see it as being a clay molder. And you have this block of clay, which is your portfolio, all the individual trades that are going on in there, and every trade you make is either going to chip away at one piece of the clay, or it's going to add clay to the other portion of that sculpture. And in this context, if you think about things this way, you are much easier at not trying to pick direction, not trying to be too biased and trying to pick every trade. All you're trying to do is build the most beautiful sculpture, which is your overall portfolio. And I'm starting to kind of get that mentality and how I'm going about this, and I want to continue to document that as we go. So, Manny. All right, I'll call you Manny. Thanks, Joe. Joa. Manny. Working on it, man. So how I am planning on doing this right now, and if you look, all the different trading sites will give you their own secret recipe, and I'm not trying to tote this as being a secret recipe. This is just something that's going to help me, is I want to start the vast majority of my trades off as a credit spread. And I've talked about this and how I want to adjust it, but my thought process is this. At any given point, when I walk into the room and I walk into my portfolio, I'm going to be plus or minus some delta. Here, I ended the day negative 10 delta. Now, on a $10,000 account, I still think that's very neutral. And looking at the graph, you couldn't really distinguish whether you're bearish or bullish just from looking at it. But here you can see I do have a little bit more red on this side of the curve. So, yeah, negative 10 delta sounds about right. So for me, even though that's not a big difference, if I walk in on this, I'm going to look to put on a credit put spread. And let me try something out here. So if I look at my portfolio and I want to put on a credit put spread, let's say the stock price is currently sitting right here. I'm going to look to sell about the 30 delta, which is going to make the credit put spread profit loss diagram look kind of like this, where, let me see here, anywhere above this strike price, let's say if this is 100, maybe this is 95, anywhere above 95, I'll be profitable. Let's go. It's probably not necessary, but anything above that would be profitable. Anything below it would be not profitable. And what this is going to do is automatically add positive delta to my overall portfolio. And that's obviously the key, because what that's going to do is that if my overall portfolio is this curve, it's going to start to flatten out this side a little bit bigger, and it's going to cause this side to kind of come a little bit deeper down like that. So that would be my initial onset, and that's going to neutralize my portfolio delta overall. But again, markets change all the time, and a lot of people are scared putting on directional trades because this is a directional trade. Let me go ahead and clear that out for a second. But I'm not scared, because the overall goal of my portfolio, like I mentioned, is to keep it all in balance. So if we have this trade, which is on like this, and if the strike price gets tested, the short strike gets tested, then automatically I know what I'm going to do. I'm going to wait until the strike has been breached and the new delta value of this short strike is at the 0.6. Now that could be positive 0.6, negative 0.6. It all depends on whether you're doing a call or a put credit spread. But as soon as that delta value doubles up, I'm going to sell the corresponding equal and opposite spread on the other side. So let's give this an example. Let's say this was a $3 wide credit put spread, like it's drawn here. I would then, once that delta gets doubled, I would go ahead and sell a $3 wide credit call spread, which would turn the overall portfolio into an iron condor. Now, this is great for a couple of reasons. One, the initial trade balanced my portfolio. That's the check in the box. Two, when I do get tested, I automatically increase the amount of credit I've received by selling this guy, that opposite iron condor, And because I kept the width of the strikes $3, my risk did not increase. My overall risk on the trade is still a maximum loss of $300 minus the credit received. And I'm not sure if you guys are all familiar with how the pricing model works on defined risk trades, but when you are going to calculate your max risk and max loss, we won't get into this in this video, but it's defined based on the credit. Let's say the dollar width of the strike minus the credit received. So, and that's the total credit received on the course of the trade. So, for example, the $3 wide, let's go ahead and call that $300. If we received on a $3 wide credit spread, let's say we received $1 for that, for easy math. If we got $1 for that trade, that ends up being $100, multiplied by the 100. So our overall risk is a max loss of $200. It's just as easy as that. Now, when the math gets a little bit more, the numbers aren't as easy as 300 and 100. It does kind of help, and that's where I think that Tasty Trade is a great platform. Makes it very easy to show all this. But I digress. Let's get back into the the strategy here. So the first order of command is to sell that corresponding spread on the other side. Like I said, no risk additional to it. What it also does is your portfolio will have, if it's been tested on this side, your overall portfolio is going to need some opposite trades on the other direction of, so for example, if your portfolio is going in this direction, you're going to need that other trade to help, again, neutralize. That's the whole goal here. So instead of going straight off in that initial trade and selling both the put and the call side, I want to leg into that iron condor and use it as a defense mechanism. To me, that's just going to be easier to manage, going to be easier to sculpt that overall portfolio beta. So that's a little bit of background. If it continues to get tested on the other side, my thought is, depending on the amount of credit I can receive, I could take this entire new spread that I added and continue to roll that down, or I could try to push it out in time and collect more credit and give myself more time to be right, or I could just let it go to expiration and take the loss. These are kind of things I'm working through as I get some good examples. So let's go ahead and sort the portfolio right now. Nicely, I have a lot of green on the table right now. We're not going to go into every single trade, but a couple of them that I do find are interesting. I've got one up in Qualcomm that I put on really just recently, and it's about halfway to my profit target. All the yellow checks do mean that I have got a working order in place, and Tasty Trade makes it very easy. I just click on both of the legs, and I can say close that at a profit, and it'll allow you to set the profit based on the credit that you receive when you initially put the trade on. And I can set that at a 50%, and it'll go ahead and do all the work for me. It'll calculate that price that I need to sell it at, and I can go ahead and review and send that transaction, which is really cool. So as we look through here in the positions, I've got a put spread in Qualcomm's not being tested yet, but once it does become tested, this is going to be a great case study where Qualcomm has a lot of volatility. That's why I sold this thing. The percentile is only at 38 right now, but the overall, because it's a very volatile tech stock, it very well could test this side. So I'm already prepared to wait for the deltas to work themselves out, wait for the probabilities to work out, and sell that corresponding call side when it happens. Moving on to Facebook, put this one on a little while back after the earnings announcement had happened, but there was still some good juice in the volatility. So I did put on a bullish trade on it after reading some of the notes. I thought that Facebook is it's helping my wife's business quite a lot, so I may as well go ahead and throw them some love, and that's been paying off as well. No testing happening here. GM was thrown on today. This was, again, just a portfolio balancer. And like you can see, even though I have a bunch of these credit spreads on, the overall portfolio is kept at a nice balance. I do have some iron butterflies here, and I'm still feeling out how I like this strategy. what's great about iron butterflies is that they give you that nice peak to your portfolio. So if you combine all the credit spreads that are coming through kind of like this with that big peak, it does give you that overall rounded shape, which is really where they exist in my portfolio. Additionally, it's something you don't need to adjust a lot as you're going through, which I think is helpful. It's helpful, but it's also kind of a pain because when you do get tested, you're limited in what you can do to work with that position. You either roll it out in time, you could go inverted and do one of these numbers where you have these two positions on, but I don't want to get too bogged down in the weeds and over manipulate my defined risk trades. My first time placing a trade in SPY itself. It has terrible implied volatility. I'm breaking all the rules from selling premium. But again, I wanted to get occurrences up, and I wanted to get more of my capital at work here. So right now I'm only at 30% employed of my capital. And given that everything is a defined risk trade right now, more needs to get at work. Disney's, again, another credit spread. It was a call spread. I was kind of feeling kind of bummed out about the cruise. I went ahead and was bearish on Disney, but looking at their stock chart, maybe that was a bad call. Took a little bit of contrarian play there. And we won't go through all the others, but you can kind of see the overall philosophy. My retail sector is another iron butterfly. So if we look at kind of the impact of iron butterflies versus the impact of credit spreads, if I were to take this one off, you can see, not a whole lot of difference happens in. It's a very neutral strategy. It's just the entire portfolio kind of shrinks in from the top and the bottom. But if I do take off the Facebook, for example, you can see that one of the wings does get much more dramatically overstated than the other. So it's kind of great to see how you can be the sculptor of your own portfolio and how each trade impacts the overall portfolio. So that being said, we've been going for about 17 minutes here. Manny, thank you for joining. It's been great chatting with you tonight. Hopefully you're getting something out of this. If you guys have something you want to talk about when it comes to options trading, again, I'm not going to tell you that I'm the expert of it, but I'm actively engaged in learning this trade. I see this as being a future business for myself and potentially for a lot of other smart guys out there that just want to open up some freedom for themselves. So, subscribe, hit the button below, ask me a question, help me know what you guys want to learn about. And if I don't know the answer, I'm going to go out and find it. So with that said, John again, signing off for the night, and hope you guys are having a great time, a great week, and happy trading. See ya.